Hello everyone. If you want to go to my free course, type henry-ward.co.uk into Google, then go to Henry Ward Trading, and then this here is my free course. Click on Start Today. If you want to go on to the webinars that I do every Sunday and every Wednesday, click on Trading Academy and then click on Start Today. So this is the Trading Academy. This is the full training, the webinars, direct access to me, everything that you want. The Nasdaq has been trending quite nicely for us over this period of time. Anyone who jumped in here went and actually got a 3-to-1 as of yesterday. You would have hit a 3-to-1 right there. But what we've seen is we have this trend line coming down here. So we have a bounce, bounce, bounce. It's come back into this third bounce. Now, a lot of people are looking at this and going, well, is that trend line strong enough to hold this? But when you put in a couple of indicators, like so the moving average, it starts to become a little more clearer once we start adding in some stuff. So change this to sort of red so we can actually see it. Change the thickness as well. Input. Change this to 200. Okay. So we have the 200 moving average here. Moving average. And pop that in style. The 100. I will change that to green. Change the thickness as well. The 200 should be on the trend line. Okay, it's trying to find the right actually moving average. Well, let's see the exponential. See if that one is any better. EMA. We'll change that to purple. There we are. SMA. Delete this. So the simple moving average, or sorry, the exponential moving average. So I know some of you guys use the simple and the exponential. So the difference between the simple and the exponential, the difference between the two of them is the exponential is more weighted to what is happening. Okay, so I'll actually go back and explain. So a moving average, it gets an average for over a particular period of time. So just imagine in this particular webinar, there was 100 people on the webinar, and we were looking for the average age of everyone on the webinar. Now, I got everyone's age, added it up, and then divided it by 100. So that means then I can get the average age of everyone that's on the webinar. So the average age could be, say, 50. Now, the simple or the exponential moving average. So the exponential moving average is weighted a little different. So what it will do is everyone is not equal that walked into the room. So the first person that walked into the room has less weight than the last person who has walked into the room. So the one who walked into the room has more power, more influence. Okay, and that's the difference with the exponential and the moving average. Okay, and that's the big difference. The ones that I've always used throughout my trading career is the exponential rather than the SMA. Okay, that's a simple moving average. So what we have here is we have the EMA, so the exponential moving average, and it's also now hitting that as well. So we have the moving average is coming into contact with our trend line as well at the same point. Now, with this happening here, our 200 moving average, would that give us more selling power or more buying power? Which would this give us? More buying or selling power? Which of the two do you think this would give us? So we would expect more sellers to jump in here at this particular moment, where at this particular point, at this particular junction, we'd expect more sellers to jump into this market. Now, as a general rule, we have a downward momentum overall in this market. Yes, we have cyclicity to the upside, and yes, we have made money from that cyclicity, but at the present moment in time, we've had more sellers in the market than buyers. We've come up into this trend line and this moving average. So for me, once the two of them have come together at the same point, we do have a little bit of selling momentum there. So as we can see with my drawings, I have two particular drawings. I have expected A and expected B. Now, I would expect B to happen to come down into this area and then pop to the upside again and eventually probably break this 200 moving average. At the moment, it looks like to me there's more buyers in the market than sellers here. But again, it wouldn't take a whole lot for this to be shaken out. It wouldn't take a whole lot for this to be rectified, okay? But at the present moment in time, it looks like there are more buyers in this market than sellers. Now, another indicator that could tell us whether this is a sell-off is stochastic or RSI or MACD. So we're gonna stick in actually all three of them. Stochastic, relative strength index, and then the last one is MACD. Moving average, convergence, and divergence. Henry, can you explain what CPI could cause tomorrow? In my opinion, fuck all. CPI to me is one of these things that is not very big. It's not something that will massively drive the market in one way or another. With CPI, they generally have the estimations pretty close, and it's already sort of tailored into the market. So in my opinion, very, very little. But you can sort of read into it more. So CPI news would have a bigger impact on the likes of US dollar rather than the stock market, if that makes sense. So it will affect the sort of US dollar, but the stock market, it should be minimal sort of effect on the stock market compared to, because it's all, remember, all that is all dollar focused. Does that really, CPI news, does it really matter to Apple shares? Does it really matter to Google, Amazon, Tesla? Not really. But dollar related, yes, a little bit more, but stock related, absolutely minuscule. unless we might have one day of a sell-off and then it continue, or we might have one day of buying and then the sell-off continue. But as a general rule of stock market, very, very little. So what we're looking for is this high and then this one here. So we're looking at this high and here, see, are these highs getting higher? And if we look at this one here, we are getting higher. So this is telling us that there's still more momentum to the upside. If we then come down here onto the RSI, we can see, look, it's clearly getting higher. And then if we look at, say, the MACD here, it's level. So we're looking at the MACD here, there to there. This chart here is high. Or if we look at the MACD versus the trade line, it's actually getting higher as well. Okay, so there's nothing here to indicate from these forward thinking indicators to tell us that this is going to turn around and into a phase 2 to the downside. Theoretically a phase 2 to the downside. Would expect this to have a phase 2 and then carry on as a phase 1. But that may change once the downward movement starts happening. So if we look at all these, they're all sort of indicating that this is still on par. It's exactly where it should be. And we should be at a point. Now, sort of a telltale sign on this would be is if this low, this one takes it out. Okay, and if we had a higher low on the likes of this, we had a higher low on this, this would tell us that there's potentially more buyers to the upside than downside. But if this low, this one takes out this, so it comes down to here, or actually comes down a little bit further. Just say this comes down to about there, and it's now a lower low. And if this continues making a lower low, it's continuing with, there's more sellers in the market than buyers. But again, I don't massively read into the likes of indicators, but it's a good thing to sort of know and understand what's going on. Same with the likes of the moving average. I know a lot of you guys have pointed this out to me over the last week or two. Yes, it's something to keep an eye on. Would I be looking to put a buy signal in right here? No. Now, the moving averages has nothing to do with that. It's that we've had a phase 1 here. It's overextended. I just need a phase 2 before I'm looking for my next entry. So it's not that these indicators have told me this is not a buy signal. I would never buy here because we're too overextended. So just to give you a little refresher on where the good buy signals are compared to, say, the bad signals is, I'll change this to blue. So previous high. So that's the previous high. That's the previous low. Now, anywhere in between that, for me, is a place where we could potentially be buying this. This is a good place. This is where we should be looking in trade. I call that early P1. That's early phase 1. That's what we have there. We have that early phase 1. Now I'm going to change this to red. Now anything from here upwards, and at this point, this is late phase 1. And that is not the place where we want to be taking our trades. So just make sure you sort of understand that. We have early phase 1 and we have late phase 1. At this particular moment, we are late phase 1. So we're not looking to take a trade. We're not looking for entries. We are now sitting down waiting to see what's going to happen in this particular market. And if it comes back to, say, this level here, then potentially we can look to place a trade there. Okay, it may come a little bit lower. It may come down into this area here. But they're the sort of two areas that we're sort of looking for this market to come back to. And if it comes back to the first one, we will have a look at the trade. We will assess it. And then if it meets our rules, we'll take it. If it comes down to the second one, which is a stronger level, we will have a look at, and then we will assess our trade. Does that make sense for everyone? Anyone not understand that? Or want me to go through that again? So have a look at these levels here. There's 1, 2 touches there on that, 3 touches on it. So it may actually come down to this one and then bounce, or it may come back down to around here and then bounce again. So that's what we're expecting to happen. Now it could just continue motoring, which I wouldn't like to see. I don't want to see this just take off all of a sudden and continue running. I want to see this come back. I want to see cyclicity. I want to see the market have highs and lows and it more natural, because what we've had with the recovery from the actual pandemic, it's not sustainable. So I want that to come back down, and then it gives us a chance to have a little more liquidity in it. It gives us a chance to take a little bit of profit from the sellers, and it gives us an opportunity to start scaling into positions. Okay, because I'm not sure many people took this down here, and I'm not sure many people took it here. So now if it comes back at this point and gives us a nice entry, it lets us know that this is the potential change of direction. And if we look at the S&P, look, very, very similar. We're back to the same level. Now the trend line here in the S&P doesn't work. I'll show you this one. Okay, so it doesn't work there. So that's why we don't have a trend line on the S&P. We have that. We're back hitting that 200 moving average. Now, is there anything there that's more that for me that's more important than the 200 moving average? Could anyone spot anything? Anyone spot anything that's more important than this sort of 200 moving average for me? Everyone should have spotted that straight away. Double top, look. There's a double top right there. That is a selling signal. That is a selling signal. It's come up double top. Now you could say, look, we're also here. So we're in this little bit of a buying zone. So we're in a little bit of a buying zone here. In between this here. So anywhere in between, there's a buying and selling zone. So at this present moment in time, this is a selling zone because it's hitting a ceiling. So we're expecting it to hit the roof, hit the ceiling, and then bounce back down. Whereas here, it came down and hit the floor, went up, floor went up, floor went up, floor went up. This here, it hit the ceiling and went down. So we're in this zone, this area. Rather than having it just a hard area, this is sort of a zone going on there. So I'd like to see that pull back into, say, that area there, pull back, and then we could go again. And if we had that pulling back there, we also would probably have a nice little trend line on that as well. But again, that remains to be seen how that works out. Very similarly, look, again, we're touching the 200. The trend line is there. Now I've left the trend line because a little closer with this one and the S&P. We're also touching a level that is 1, 2, 3, and then we have our 4th touch here as well. So we are touching levels, we are touching areas where we could potentially see a little bit of pull off. So the S&P 500 is touching the 200. The Nasdaq is hitting the 200, and the same with the Dow. So the Dow is also hitting that. Now, if you're looking to take this short, if you're looking to take that short, where does your stop loss go? Does your stop loss go there? And have it nice and tight. And that there would be our 3-to-1. So that would be the, oh, we're on top of that bar there. We're above that horizontal. Entry below that bar, nice high test bar. And if it goes down, we're looking for this to hit profit. Now, for me, if I'm taking profit, I want my take profit just inside that level. So in this one, for me, is a 2.4-to-1. But do we want to be safe on this trade? If you want to be safe, you put it above this high here. You put it above this high, but remember our take profit is still in the same place, which means then that this is a 1.5-to-1. So then you have to work out if this is a trade for you. You have to work out, is this something that you're happy to jump in on? But remember, we are going counter trend. So we do have cyclicity to the upside here, but we are going with the bigger momentum. Okay, the bigger momentum is going down. Now, the question remains whether the bigger momentum is going to continue shorting or whether this is now going to be the first bit of this upside. So they're the questions you sort of need to be asking yourself. German DAX. So the German DAX has come up and hit that ceiling pretty nicely and then sort of come back down. Again, it's not something that we would have been looking at trading, but we did get a nice sort of break and retest there. But the momentum or the movements in these for us to be jumping in and jumping out is really, really small. So the risk to reward is not really there at the present moment. French CAC has broken that 200 moving average. But as we talked about on Sunday, look, we've had 1, 2, 3, 4 touches on this. Look, it's now bounced and hit the ceiling again. Is there a short position there? And our take profit or our stop loss would have to go above this high. Our take profit will be inside that, which would be 1.81. Is that a valid trade? Off that 1, 2, 3, 4 touches. And if we look at this, stochastic is the same height over here. Okay, so there's very little, there's no divergence there either. So is that a trade there? Is that valid? I know the French CAC is not something that we've massively traded lately. Why? Because it just keeps gapping and there's no sort of real trend to it. So at the present moment, I'd be inclined to stay away from it. But again, there's a better trade there than there is on the German DAX. but the French CAC looks like it has more momentum to the upside than the German DAX. UK 100, we wanted to come back into sort of this level. And if it comes back into that level, then I'm sort of looking to trade it. But at the minute, I wouldn't be looking to short that. It looks like it's a stronger of the indices at the minute, the ones that we're looking at. So it's not something I'm massively looking to trade. So for me, it is definitely a sort of stay away from and leave it alone for the time being. Let it come back into this area. And then if it gets back to that one, or even this one, if it gets back to this one, this seems to be the level where it stops at that 7,039 level. That seems to be where it stops. So China, we talked about placing that trade there in China. Again, is that a phase 2 here? Not really. But is that a trade there? Well, it's setting up. We now have had an inside bar. Yesterday, little small red inside bar. Today, we haven't had much movement either. So if that bar finishes like that, we have 2 inside bars, one after the other, which is telling me that the buyers are not massively flooding the market at this particular moment. So we have a potential for this to continue going down. And I would imagine all likelihood it's going down. The question is whether it'll go up slightly first and then down, or whether it'll go down straight from that point. Did anyone place this trade? Has anyone looked at it? Has anyone taken it? So most people have said no. Okay, cool. Well, again, if it gets down to here, this could be a really nice place to be placing a buy order. But again, let's see what happens. China. So again, we're never really looking for a 3-to-1 on this, because it had to go through too many levels of support and resistance. So we look at this blue line on the higher time frame, and there's a couple of levels back historically, but I would have expected to come down to this sort of red level before it bounces off this one. But if we look at this, it's bounced off the 90 level. Why is the 90 level important? Can anyone tell me? Absolutely. So psychology, it's a round number. So years and years ago, before traders actually had the internet and stuff like that, they would pick round numbers to actually place sell and buys on. And there's no different today. No different today that you will see massive change of direction at $100, $90, 80, 70, 60. Okay. So we will see things like that. So you've seen on that blue level, you've up $90. So that's where we actually see the market sort of turning around. So there's no coincidence with the likes of that happening. So round numbers are pretty. Look, I take them into a tiny little bit of what would I call it? Tiny less into what's going on, but again, not massively. But again, this looks like it has more momentum to the downside. So if I extend this level over at say $94, I would sort of expect it to sort of come back into this trend line here. Pop that up a fraction. come back to this trend line here, are also this horizontal, this red horizontal here. And again, if we come back to there, we'd be very close to that 200 moving average as well there. I'm expecting a little bit of a sell-off at that particular point. So what is that? $95, $94, $94.80, $95 in around there. It looks like there's a little more downside here. Looks like there's a little more downside here over the short term. Now the question is, I have no idea how much. That's the thing. I have no idea how much. It all comes down to how we as people's psychology, how much of it are we taking into consideration? Psychology of the market, psychology of what's happening, and then whether Russia turns off the tap, and so on and so forth with the likes of oil there. So this is all you need to be reading the news, you need to read what's going on. But at the present moment in time, it looks like there's more selling power than buying. Now, this particular one here went up, hit that double top, and it has come back down. Now, we did talk about this as potential buying signal here, but it wasn't something that would have been looking to trade at all. But I know some of you guys were looking at this as a very sort of soft level, and some of you guys were looking at it to take. If you had taken that, you'd been triggered in and then triggered out. The sell signal, I know we talked about it, and we went down to the half hour looking for an entry. It is not something that I have taken, but anyone who took that, well done. You went down to a 3-to-1, good trade. But for me, it has to come back down to either this level or down here for me to take this serious. It's not something I'm looking to trade at the moment. So for me, it's stay away from this particular one. There's no value in it at the moment. There's no consistency. It is the only last consistent was this high. He had hit this high, rejected it. And for me, the next one is down here. That's the next sort of level for me to be looking to trade it, is if it comes back down to there. 1, 2, 3, 4, or back down to this one down here. Wheat again has, for me, is to come down a little bit further before it gets down to a potential tradable area. But if we look at this, it's just been moving sideways. It is not something that I am looking to do at the moment. Look at silver. So we talked about silver being a potential sell. Break and retest off this. At this particular point would have come down, went to 0.7% up, and then you would have been triggered out today or even yesterday. You would have been triggered out on this particular one. Now, we did talk about this one as a potential trade to the downside, but what I did say is before we take this, we need to have a look at gold. At that particular point, gold was telling us a different story. But again, gold came back to this level as well. 1, 2, 3. Come back to this level again, come back to this trend line. We had that sort of high test bar there as well. And there was a short signal on that as well. And anyone who jumped in there short, you would have been triggered in and then triggered out as well on the next bar. So you would have been triggered in on this bar, and then you would have been triggered out. So anyone that took either of those two, you'd have been triggered in and triggered out on either of those two trades. Now, if we have a look at what the reason was, is we need to go a little bit further and we need to have a look at the dollar index. So have a look at the DXY, which is the dollar index. And we have come back down into this level. We've had one buying day, and then we've had 1, 2, 3, 4, 5 days moving sideways. So this looks like we are going to get a bit of momentum to the upside, but it also looks like it's struggling. It looks like it's waiting. So we've had, even if we count this bar here, so 1, 2, 3, 4, 5, 6, 7 bars, and it's still sitting on this little support and resistance. It's still sort of sitting on this trend line, and it hasn't gone anywhere. Even with the non-farm payroll results, it hasn't really gone anywhere. It's sitting, waiting. It's sort of looking for the market to make a decision before it sort of takes off in a clear direction. But at this present moment in time, it looks like it has more upside. But because it is moving sideways here, it could have a pretty big momentum to the downside here. Okay. Generally, that's what happens when we see it lose power and drop to the downside. So if we look at it here, it popped up, it moved sideways, and then it popped up, phase 2, and automatically it popped up, phase 2, popped up. We had a little bit of sideways movement. It popped up, come back down here, and now we've had sideways movement. So sideways movement is not great for momentum. So we have to just either sit this out or not take the trade here. So anyone that took that trade there, entry there, stop loss here, you're sitting about break even, but you've been sitting there for the last 1, 2, 3, 4, 5, 6. Could you please look at Euro USD? Well, Euro USD is going to be the opposite to this, Felix, more or less identical. The only difference is that the dollar index is weighted 60% to the DXY. So it's going to be almost identical, only in the opposite direction. But I'll pull it up and show you so you can actually see it. So that's a quick tip for you. Anyone who wants to have a look at the dollar index, just look at Euro USD. Again, look, more or less the overall trend is down and we're sideways, but it's just been moving sideways for a little bit longer. So we would expect this, looking at this, I'd expect this to sort of start going up. For me, this is for dollar strength. It's been moving sideways too long. I don't see any reason for this to continue going down. Looking at that, I'd expect it to pop to the upside, if I'm being honest. Would anyone disagree with that? Does anyone expect Euro USD to continue going down, dollar to continue getting stronger? But again, is this something we can trade? No, absolutely not. There's no signal here. There's no setup. There's no nothing, unless you are trading a breakout of a sideways movement. If that's your strategy, then there's a setup here, a breakout. You could put what's it called, an OCO order. So if you put two orders, you put a short order here, so we're going down, and then you put a buy order here. And what happens, whichever order gets triggered in, the other one cancels. And people sometimes do that at these particular levels. If you're looking at the likes of this, I think it's an OCO order. So one order opens, the other one closes. But as we know, with a sideways market, there is a possibility you get triggered in, triggered out, and it continues moving sideways. Let's have a quick look at our cryptic friend. So Bitcoin hasn't really gone anywhere since the 18th of June. Hasn't really gone anywhere. It's just moved sideways. Slightly up, ever so slightly. It's gone from 17 to 23, but that momentum doesn't really do any good for anyone. So at the present moment, this is very, very slightly to the upside. All right, everyone. It's been an absolute pleasure. Thank you very much. If you're watching this online, please click the like button, share with people. and get people over onto the YouTube channel for me, please. Thank you very much, and hope you all have a lovely day. See you now. Bye-bye.